Hey Forex traders, Israel coming here from Vintageducation.com, and on today's video I'm going to be showing you how to master the art of Forex psychology. So I'm literally going to be walking you through three phases of a Forex trade, literally from the standpoint of a losing Forex trader with losing Forex psychology, and show you what to do from a winning standpoint for a Forex trader who has winning Forex psychology. Now I need you to understand the significance of Forex psychology because it ultimately determines whether you make money from the Forex markets or whether you lose money from the Forex markets. It's just that simple. Okay, if you've got good Forex psychology, you'll find yourself time and time again making money consistently. If you've got bad Forex psychology, you'll find one way or another to actually blow your trading account and actually lose your whole investment. So it's really important, and like I said, I want to literally run you through the three phases that I want to cover in regards to a Forex trade. Now, ultimately, the best way for me to do that is literally just to show you on a real chart. So what I want to do right now is literally go behind the charts and just literally walk you through the different kind of Forex psychology that runs through people's minds. So let's literally just jump straight into the charts right now. All right, so what we're actually looking at right now is the Euro AUD. This is a 15-minute chart. Now, what I want to say before we get into this is, for me personally, I actually get into a 15-minute chart, okay? The first thing I want to identify is which way the market is actually going. Now, I think this is really important. Now, I'm already differentiating between winning Forex psychology and losing Forex psychology from the standpoint of Forex traders that have that winning mindset and actually have positioned themselves for Forex success, want to put themselves in the most comfortable position possible. So let's say, for example, two Forex traders are looking at this 15-minute chart. One Forex trader, what I've literally done first is literally identified from higher time frames which way the daily momentum, the long-term momentum is actually going. Okay, when you look at the higher time frames of the Euro AUD currently, it's clear that the market is really bearish and there's a lot of short bias into the market. Okay, so I already know which way the market is going is short. Okay, so the losing Forex trader with losing Forex psychology doesn't ever think about any of these kind of things. He just literally comes to the markets, and if he hasn't been completely tarnished, he would be looking at a 15-minute chart. If he's just a completely gone case where he's literally been filled with loads of crappy information, or he's just literally lost a lot of money and damaged his Forex psychology, he'll be looking at even lower time frames, just literally looking to scalp in and out of the market. High frequency trading, which is literally in a lot of cases just guaranteed to blow your Forex account. Okay, so let's just say, for example, the winning Forex trader is actually identified from higher time frames which way the market's going. So I know that the market's going short, okay? The losing Forex trader actually doesn't know which way the market is going and has just literally entered the market saying, okay, let's see what way the market's going based on this 15-minute chart. Now look at the differentiation between those two situations. The winning Forex trader is relaxed, is comfortable, okay, because I'm not looking at the market saying, okay, which way is the market going? I already know, okay. All I'm really looking for is how can I actually get on a trade that follows that long-term momentum. You can obviously go in a different direction, okay, you obviously can, it's not impossible, but what do you think is the most comfortable, the most low-risk opportunity to do? It's literally to go with the long-term momentum on these intraday charts, okay? That's just literally the easiest things to do. So you think about it from that standpoint. That's the first thing, okay? Literally an unadvertised bonus. There's other three things that I really want to cover, but that's the first thing, okay? I identify which way the market's actually going, okay, before I actually come down to these lower time frames to intraday trade the market, okay? So from that standpoint, I'm already prepared, but the losing Forex trader has no preparation. It's just decided, okay, let's go and trade, okay? Now, the three things I want to actually cover in today's video, which are really important, are how you actually enter the market, okay, your risk, and how you actually exit the market. Because ultimately, when it comes to success in Forex, it's about can you make a profit through winning trades, or are you going to continually lose through losing trades, etc. Okay, and no discipline. Okay, so I want to actually run through a trade sequence now to actually get you to understand what's actually going on. Okay, so let's first cover how you actually enter the market. So just based on what I've already covered already, the winning Forex trader is more relaxed already because he's taken the time, or she's taken the time, to actually look at the higher time frames and understand which way the market's going. So the losing Forex trader with losing Forex psychology is already at a deficit, okay? And when you think about it from this standpoint, another thing I want to trickle into this training is the whole concept of market manipulation, big institutions, big banks, hedge funds already, and all that kind of stuff. Sort of manipulating the market, okay, because that plays a big factor in it too. So as we look at the 15-minute chart here, okay, I already know that the market's going short. The losing forex trader doesn't know which way the market's going. So now we're looking at entries, okay. Now I was actually literally really looking at this chart, okay, a couple of minutes ago, like about 45 minutes ago, and knowing that the market's going short, I was looking at at these particular candles here, saying, okay, is this a good opportunity to go short? Now this is the difference, okay. The losing forex trader is so hungry, okay, is so encapsulated in making money, okay. Big institutions, big banks, all of those big authorities in the industry can manipulate them from this standpoint, okay. These candles here, okay, especially this red candle here, which actually left behind a long tail, are, I can guarantee, a candle where retail forex traders, losing forex traders with losing forex psychology, which have no control or discipline, will be watching as the market's going down and saying, okay, I need to go short right now, okay, because the market's actually going to break out, okay. Now, I was actually looking at this and I actually said to myself, you know what, I know that the market's going short, but this isn't a good opportunity to take a sell position because the price is low, okay. I'm looking for price to actually come back up to retrace before I actually get into the markets. Now, it's actually funny because I know if I was actually looking at this years ago, I would have actually taken a short in this position. And the big institutions know that. That's why they will leave a candle like that to appear for part of the candle time frame. It's obviously 15 minutes. Loads of traders that can't control themselves, that aren't thinking the way you need to think, would actually be taking short positions in this particular region. But look what actually happens, okay? Because after that actually happens, what happens? The price starts pushing up, okay? Now, we don't know how high the price is actually going to push up, okay, as we look at it, but we can already see that the losing forex trader doesn't have control, is not disciplined, and will enter the market recklessly, okay? And that's how they actually lose money. Whereas the winning forex trader will assess this and say, you know what, I know what way the market's going, but I need to get the best entry possible, okay? So I'm not going to take an entry position down here because that's actually going to make me actually potentially lose money. And you can actually see, okay, price push back up, and most people would have their stop loss around this kind of region and probably would have been stopped out, okay, for a loss, okay. Now what are they thinking in that after that? They're saying to themselves, okay, you know what, I've got it wrong, it's time to go, it's time to buy, okay. Now that's the second thing the big institutions know. Okay, after they've taken a really aggressive, greedy, pretty much trade down here, okay, they're now saying, okay, let's switch the position, okay. Now they switch the position and maybe the price is actually going to push up a bit more, but at some point this market is actually going to start pushing down, and that's when I'm going to be looking to actually enter the market for a short position, okay. So let's say price pushes up a little bit more. Let's say price pushes up to about here, okay. Not the most, but people that have actually jumped on that trade will start thinking, okay, yeah, I got it right, XYZ, okay, getting really excited. But what's actually going to happen is price is actually going to potentially push up a bit more, consolidate for a little bit, and then start to drop down like this. And that's, if something like this happens, this is in this kind of region is where I'm actually going to take a short position after the price is actually pushed up, okay, and giving me a really good opportunity where I know lots of traders that can't control themselves will start thinking, okay, the market's actually pushing up, and price will actually start to push down, okay. That's how the institutions make all of the money, okay. They lure people with bad forex psychology into the market to obviously go the other way, okay. And it's sad, okay, but it's true. Once you know this, you obviously put yourself in a position to do something extremely different, okay. So that's the first thing. Traders with bad forex psychology are entering the market the wrong way. They're not thinking about it as a skilled trader. They're thinking about it as an emotional trader who's just thinking about the money, okay. I call it money bag guys. It's literally all they can see in front of them is money, okay. And if they actually took a bit of time to say, you know what, is this actually a good trade? Is this a trade that a professional would take, or is this just a trade someone that's being emotional right now would actually take? And that's literally what losing forex traders do with losing forex psychology. They trade based on emotion, okay. They don't trade based on what makes sense, okay. It wouldn't make sense to take a short position down here because this is the bottom of the move. You'd want price to retrace a little bit, buy, because you know people with bad forex psychology will start to buy, and that's obviously when you get the short position, okay. The second thing I want to talk about is risk, okay. Now if you think about it from this standpoint, you look at the chart and you say, okay, let's say I take a short position, I'm a trader with bad forex psychology and I get really excited, and I take a short position down here, okay? At best, okay, you want to put your stop loss just above this previous piece of price action where price dropped from before. So let's see how big that stop loss is, okay? Okay, so at a bare minimum, we're looking at about a 30 pip stop loss. Now, 30 pips is not the kind of stop loss you want to have, especially on a 15-minute intraday kind of chart. You want to close that in as much as possible. Now, that's the difference, okay? Because of the Forex traders' greed, okay, and lack of discipline, okay, they're undisciplined, they've now put themselves in a position where they've entered the market wrong. So what does that actually do? That makes them risk a lot of money, risk more money, okay? You're risking 30 pips when you can actually risk more, less than half of that, and I'm going to show you how to do that in a minute, okay? So you've got into the trade wrong, okay, because of greed and emotion, the wrong kind of emotions to get you into the trade. You've now entered the trade with loads of risk, and as you can see, you should be seeing more and more as we go through this video why Forex traders actually lose money, because the Forex psychology is all wrong, okay? And I'll go back from this standpoint. Let's say I want to take a short position in this region, okay? I don't want to take a short position down here. I'm actually really disciplined and I say, you know what, let's wait until price gets back up here. Now, price is up here currently, and let's say, for example, okay, we go from the black line, okay? Price to push down, price is actually pushing down up. But let's say on the next candle, price decides to start moving down and just drops below that black line. So we say, okay, we want to take a short position from this particular region. Okay, let's say stop loss in the same particular region, but look at the difference. Okay, just below the black line, and let's see what it is now. Okay, you see how I'm even stretching it further. Okay, and you're looking at a 10 pip stop loss. Okay, so not only have I been prepared and relaxed, okay, I've already identified when price was in this particular region, I want to wait until price actually moves up. Okay, so I've been prepared, I've been disciplined, and I've been patient. Okay, so those three things have awarded me with minimal risk on my trade. Okay, so I've entered the market at the right way. My risk is extremely low. Okay, and what, actually happens when you lower your risk, okay? For those of you with a 30 pip stop loss on this particular trade, opposed to the 10 pips that I'm actually going to have on this trade, that's 20 pips of potential profit that I've actually just made, just from my entry, okay? So I'm already 20 pips ahead of you in regards to this trade, because why? Because I've been prepared, I've been patient, I've been disciplined, I've entered the market the right way, and I'm sticking to principles of risking small amounts of my trading account. Okay, it's a huge difference. Okay, now let's talk about how you actually exit the market. Just to wrap up today's video about mastering the Forex psychology, and you should be able to see through all of the different principles of Forex trading that I've actually talked about, how they all apply to your Forex psychology. Okay, so now we're looking at targets. Okay. Let me put a line on here just to give reference to the two particular trade entries. Okay, so actually, you know what, let me even leave it red. So let's say the red line down below, okay, is the losing Forex traders entry. This black line here would be my potential entry, and you can see the red line is risk. Okay, so you're talking about, just for the record, you're talking about 20 plus pips difference, okay, like I mentioned. Now let's look at targets, okay, because this is actually a trade I'm actually thinking about taking if I can get a good entry on. And the target I'm looking at is all the way down here, okay? So that's how we entered the market. Now, this is the difference. Now, I've obviously gone out to an hourly chart, and this is the difference between targets, okay? A professional Forex trader that's actually switched on and actually has good Forex psychology, like I said, always wants to make it as comfortable as possible. So what I'm actually going to do, and what I do on all of my trades, is have my target in advance. Okay, you can see how I haven't even entered the trade, but I've already got this line on drawn as a potential target zone. Okay, so when I enter the trade, this is actually going to be my take profit. Okay, I'm actually going to put a take profit on the trade. Now let's actually see what it looks like. Okay, so identify that it's a 10 pip stop loss. Okay, so I'm going to be risking 10 pips to make it about 65 pips. Okay, now I don't risk more than 2% on my trading account, so just literally you can do quick math. Okay, 10 pips, 2% risk, 60 pips reward, that's a 12% return. Okay, now this is the kind of typical trade I want to take every single day I'm trading the Forex markets, and I only need to take one trade here. Okay, and I've made a potential 12% return, but if I lose, I only risk a small percentage on my account. Okay, now I'm giving you just the figures here based on the best case scenario for a losing Forex trader. A trader that says to themselves, you know, I'm actually going to use a stop loss, because most traders that are losing don't use stop losses. Okay, so I'm giving them the benefit of the doubt. Okay, now on the flip side, most Forex traders with bad Forex psychology are just greedy. So the only thing they think about is, I want to make more money. Okay, so most Forex traders with bad Forex psychology are greedy and actually don't take profits on. Now what that actually does is that it gives you more opportunity to be undisciplined. So when price is actually pushing down, okay, you're saying to yourself, well, you know what, price is actually going down, let me just actually continue to trade the Forex markets, let me stay in the trade, I want a bit more. And what won't really happen is price might actually get down to this particular region, but price might push back up. It might go all the way back up to where they actually entered, and then they might actually close out for a loss. Now the difference from my standpoint is I'm actually entering the trade, my risk is correct, and I've actually set a target in advance. You know what that does? That takes all of the emotion out of this trade. Okay, I literally enter this trade and I walk away and I'm done. Okay, so it's that simple. It's either I'm going to risk a small percentage of my trading account, which I can live with, to the point where I can actually close this all down and walk away and do other things, or I'm actually going to come back to my charts at some point in the future and see a whopping 12% return on my trading account. Okay, all automated by the time I've entered the markets. Okay, so you can see the difference between a losing Forex trader with losing Forex psychology, who enters the wrong way, who risks too much money, and who doesn't have an exit strategy. Okay, opposed to a winning Forex trader who enters or who even before is planned and knows what way the market's going, who enters with a good trade, who has minimal risk on the trade, and then ultimately he can exit the market for a good return. Okay, it's a huge gulf between these two environments, and the big institutions know what the losing Forex traders with losing Forex emotions and Forex psychology are going to do. They're not going to be disciplined. They're going to get excited by every single candle that's actually happening. They're not going to be able to control themselves, and obviously the big institutions, the traders that are actually making the money, are disciplined. They've planned things up already. They use a strategy and they stick to it consistently, and they continue to make money. So that's the difference between a losing Forex trader with losing Forex psychology and a winning Forex trader with winning Forex psychology. I hope you start applying it yourself more towards the winning Forex psychology and actually focusing on what the kind of things I've actually talked about in this training today. It's actually really, really important, and I know it will literally transform your Forex trading. Okay, if you want to learn more actually about how you can actually trade the Forex markets for a full-time income, what I want you to do is literally click the link below this video. I've got a free Forex training for you that I'm actually going to be running for you today, which is actually going to show you how to actually start making a full-time income from Forex, literally trading the Forex markets from home. So if you're interested in learning how to make a full-time income from home from Forex trading, then literally click the link below this video right now and actually learn how to trade the Forex markets when you register for the Forex training today. Thanks and take care. Hey Forex traders, Israel coming here from Vintageducation.com. Would you like a surefire way to learn to trade the Forex markets and actually start making money without literally no risk to you? Okay. One of my greatest hobbies that I like to do is actually reading, and it's actually interesting because I don't have a 9 to 5 conventional 40-hour work week, because I'm able